Now, it's been a tough time for general insurers in the UK. Motor insurance premiums are not rising as rapidly as claims costs, while in many cases home insurance premiums have been falling, while claims fraud has been on the increase. Not the best time, then, you might think, to be launching in the UK. But that's exactly what Lemonade, one of America's fastest growing insurers, has done this week via a partnership with Aviva. Well, joining me now is the founder and chief executive of Lemonade, Daniel Schreiber. Daniel, welcome to you. So why now?
Well, this has been a long time in the making, something that we've really aspired to for some time. And it's a long-term play. The UK market is really home to insurance. You mentioned that we're in partnership with Aviva. They hail back to the 17th century, to 1696. And when you take that kind of a time horizon, when you look to build a sustained, profitable, long-term business, the short-term vicissitudes, inflation and such like, really don't factor in that much. And that's been the attitude of Lemonade. So we launched Lemonade 6 years ago in the US. It's been a tumultuous time there as well. And yet we've managed to thrive, notwithstanding all of that. As indeed insurance broadly has. Insurance tends to be somewhat counter to the changes in the economy. It's very resilient as a business model.
It is indeed. I mean, you mentioned the partnership with Aviva there. I mean, they are, of course, one of the UK's biggest general insurers. People might be a bit puzzled to see you joining forces with a competitor.
Well, absolutely. And this happens a fair bit in our industry. Aviva, of course, is one of the most established and over 300 years of data behind them. So they have heft and strengths in many areas of the industry that a newcomer such as ourselves lacks. At the same time, newness has its own advantages. So being able to build a company from scratch on a digital substrate, being powered entirely by artificial intelligence, means that consumers who come to Lemonade buy a policy in as few as 90 seconds on average, and they get their claims paid at the same speed. So we pay claims in 1 or 2 or 3 seconds after you press submit, about half of the time. So you can do radical departures from what the older players were able to do on the one hand, but really the marrying of both of those strengths, all of that insight and understanding of the market with all of that insight and understanding of technology, it's a change in degree that amounts to a change of kind. You really come out with something that consumers in the UK have never had before.
Now, in the US, you have a full suite of products, home and pet insurance and motor insurance. Here in the UK, it's just going to be contents insurance initially. Why is that?
It's how we started in all of our markets. So 6 years ago in the US, it was the same story. And what we tend to do is come with a fairly simple product, very inexpensive. This product starts at £4 a month for really a tremendous suite of coverage, and get consumers that incumbents struggle to get, the younger consumers, the first-time buyers of insurance, the digital natives. At least in the US, we've been able to establish a dominant market share among that cohort, and we hope to replicate that in the UK. And then what we tend to do is grow with them. Insurance is this wonderful business where lifetime values are measured in lifetime, decades. People buy a policy in their 20s, they're still paying premiums in their 80s, but they're paying a lot more because they've had to add life insurance and car insurance or motor insurance, home insurance, etc. So we launch the new products as we get going, and then we grow with our customers. It's really a low-end disruption that has enabled us to grow in a very compelling way in the US. We do hope to replicate that in the UK over time.
When at the outset you're targeting first-time buyers of insurance policies, how do you get the data on them? How can you know how they're going to behave when you don't have a sort of track record of business dealings with them?
Well, honestly, it's a bit of the school of hard knocks. As we enter new markets, we allow for the fact that we're going to get it wrong. We are very experimentalist by nature, a lot of trial and error. We run in the US hundreds of thousands of variations of different marketing campaigns, and something like 96, 97% of them were deemed failures. So it is a trial and error, and we do allow for the fact that it will take us time. But that data feedback loop that we create becomes very powerful quite quickly. So now in the US, our data is so textured, so rich, so predictive, that even though the incumbents there are hundreds of years old, we would not trade data sets with them. Now, that wasn't true 3 or 4 years ago. We were at a data disadvantage. But when you're entirely digital, that flywheel starts spinning pretty quickly. So in the UK, we are starting at a disadvantage. We do hope that in not too long, the interactions with our customers, the fact that every part of that interaction is through an app, will enable us to learn and iterate pretty quickly.
Now, as you mentioned, your business is underpinned by machine learning, by AI. I mean, there's a bit of a debate on this in the US. I mean, about unconscious biases creeping into algorithms and, for example, black people being charged higher insurance premiums than their white counterparts. How can you stop that from happening?
It's something we take very seriously. I think if we're at the cutting edge of using AI in insurance, with that comes some responsibility to also be thoughtful about its application, and we do. So we have a full-time AI ethicist working with our teams in order to audit our algorithms. And so far, we've found that not only are we obviously compliant with all applicable laws and regulations across 50 states and the EU, but our internal disciplines are really ensuring that we are at the cutting edge of not merely AI, but AI ethics as well. And the nice thing about insurance is that it does allow you to monitor yourself. So if you are overcharging any particular protected class of people, that will reflect itself in the fact that their loss ratio will be lower than other people. In other words, if I'm charging you more per unit of risk, then your loss ratio will be lower. And that gives you a feedback loop, a true north by which you can audit your algorithms, something that we've been doing to the best of my knowledge. It's not a practice anywhere else.
All right, Daniel, we have to leave it there. I know you've worked in the US for a number of years. It's nice to see that you've still got your British accent. Good to talk to you today, sir.
Thank you. Bye-bye. Thanks a lot.